Hey, g'day guys, here to share my thoughts on MATIC and what's currently looking like it's taking place. There's a few things I can observe from the chart, and it's pretty much a bullish chart that's had a good deep pullback, and therefore it's primed for another trade to the upside. We apply a Fibonacci, look at the key levels. So that's the macro. Let's just make sure everything's clear on there. And you can see there's a lot of confluence with the levels, significant levels. And you can see that has actually taken a previous resistance. And here we can see that that was previous support, resistance, now support. And now we are at the 0.5 fib level, which is acting like support. So we've got these levels. And what we had prior to the big drop is, I suppose, a big warning wedge of some sort. And what we had here, if you look at that from there to there, and if we put on our daily, just go into the daily for a short, just for a sec. So if you look on the daily from that perspective, if I was to add the RSI and the MACD, you can clearly see a bearish divergence taking place. And the clear sign was that once this crossed over, price is high, MACD is dropping, RSI is dropping. It's a clear indication that things are going to drop, bit of a correction. It overcorrected, but then this looks like a wedge. And why do I say it's an ascending wedge? Well, we have the patterns. We have 1, 2, 3, and that's usually enough for it to drop. It's not the best ascending wedge, but you can look at it from another perspective. And these lines are pretty much clear. And what it's done, it's instead of this line was supposed to act like resistance, it did break up the upside, and then you had this resistance. We can use the body of the candles, and what we can do is we can also use that as another way of looking at it, where this sensor is part of the broadening wedge. Ascending wedge. So that breakdown is pretty clear. And that's why once we drop that level, if we go to the small time frame, you can see how once we drop that level, it plummeted. Okay, and you can see that the makings here where price is starting to drop, and we get this motion to the downside and the sideways action. Now here's another thing. This one I want to talk about really is what you can observe on a small time frame. So this is the pattern I recognize, and if you're familiar with Elliott waves, this makes sense as well. So what we have is we have an impulse to the top, we have one bounce, another impulse to the top, second bounce, third impulse to the top, third bounce, and then up it goes. So that completes the 5 impulses. Similarly, what we had here is once we've gone up, we have 1 impulse, 2 impulse, 3 impulse, and then down. So again, another reversal. Now what we're looking at is if this was the major 1, major 2, and this is major 3. So in essence, it looks like a descending wedge of some sort. So we have the counts, just like here, the 3 counts. 1 wave, 2 wave, 3 wave. We have this big one, 1 wave, 2 wave, 3 wave. In essence, it's an ABC, or we can go to the traditional ways of explaining it. We can say that's our A, B, and big C. Okay, that's a correction wave. Or you can look at it from a different perspective. We can do 1, 2, 3, 4, and usually the ABs, it's about the same level. So you can say that is an A. We can also use this. We can also say this is another type of correction, where A, B, C is a double bottom. So that's what we got. And this descending wedge is pretty much conforming. Now the question is it that way, or has it got more to go? What is clear is this trend line is going to act like a resistance, and once that breaks, it's going to start turning bullish. So let's have a clear look at that. It's very close, isn't it? If you include the wicks on the smaller time frame. So let's clear all that. Yep. And let me just save this for a sec. And I'll delete it. We can see clearly. No, I don't want that. I want this. So that trend line is one big obstacle, potentially. Just that there. So that's macro one. And I do see that coming to play. At the moment, we've got this one here. And in a way, we have this wedge. So what's likely to happen is we get some type of sideways and a pivot point, play it around there, and then up. So this is how I would trade it. If it was to come to the bottom for the last time, it's a buy zone. We do talk about the fib levels, and so if we were to no, it's not there. Sorry, we deleted it. This is a major fib level of the 0.5. So this is a buy zone. If it drops like this again, buy it. So this is an accumulation area. Actually, this band here is pretty much the accumulation band, and it might go sideways until it breaks this, and then this will become. Sorry, first one will be this. Will be pivot point, and then the second one most likely will be another pivot point, and then it'll break up to it. It'll go aggressive, and so play your cards right. If it drops down, have a bit of accumulation. Second part is make sure when it breaks out here, go long, and that's what I have for now. So it all makes sense. We have a few macro formations that have been consistent, and all reversal patterns. Some of them are much more easier, but since this one's steep, the steeper it is, the higher it goes. So this is very steep. It's going to be aggressive, in my opinion, and I'll leave it at that. So you can see, potentially, we're going to have another resistance. Now you can see this was bound to drop. It was doing a curve, and we might be finding something like that as a resistance again, and we might be able to use the Fibonacci, use this Fibonacci level to find our levels, and that's probably likely to be there along that line there. Left shoulder, head, right shoulder, maybe. Anyway, we'll see how that turns out. That's what I got for now. Yes, so please give me a like and a share, and much appreciated. Talk to you soon. Cheers.